3 most frequently asked accounting interview questions.
I thought I'd wear a shirt today, being the last day and all.
One of the most frequently asked accounting interview questions is, if you have only one financial statement to choose, which financial statement would you choose to give you the most information on the business? I've heard this question many times before, and I think the answer is statement of cash flows. The reason is, if you look at the P&L statement alone, you won't be able to tell what is the cash position or the debt that the company carries. If you look at the balance sheet alone, you can tell what the cash position is, what is the debt position is, but you can't tell anything about the actual health of the performance in terms of profit and loss. If you look at the statement of cash flows, it really has all the information you need because it begins with net income and then it goes on to detail cash from operating activities, and then it goes on to the section of cash from investing activities, and then cash from financing activities. So you can tell the P&L by looking at the net income right on top. You can tell the ending cash by looking at the bottom of the sheet. You can tell the movement and the balance sheet accounts in the operating section. You can also look at the investing section and find out what the company is investing in terms of CapEx. Financing section is going to tell you what debt the company raised, what debt the company has paid off, and also what interest was paid or received. So cash flow statement is the answer to the most important financial statement.
You're hired. Shit.
Second, what is working capital and why it is negative sometimes? This question is tricky because when you think of working capital, the equation is current asset minus current liabilities. And so the reason why it goes negative, and it's not a bad thing, it's actually a good thing when it goes negative because it's a signal to the efficiency of the business. And let me explain what that means. When working capital is negative, the formula of working capital equals current assets minus current liabilities. What goes into current assets? Cash, AR, and other liquid investments. What goes into current liabilities? AP and other accrued expenses. When current liabilities is bigger than current assets, you have a negative working capital. It's signaling that you are collecting your AR faster than you are paying your AP, meaning your operation is efficient in the way that you are invoicing and collecting your cash fast, making AR small, and you are actually able to negotiate better terms with your vendors to push these payments into the future and have a higher AP. So it's not necessarily a bad thing. This is why you have a negative working capital. The third question I get asked is about inventory. And the question there is, what is the impact on income if your inventory goes up by $10? The answer to this is that nothing. When you buy inventory, you are not impacting income. All you're doing is you are debiting inventory, $10, and crediting AP or cash for $10. That means zero impact on the P&L. This is the third question. There you go. These are the most frequently asked accounting questions in accounting jobs interviews. If you like the content of this video, please give it a thumbs up, follow our page, and leave us any comments or questions in the comment section below. See you next time.